Awesome. We've got some excellent people on the panel. So I want to introduce Mark Kenny. Mark, if you can come out. Mark is from Think Multifamily. Give him a big hand. I also want to introduce Scott Levenhart. Come on out. Acquisition manager with Ashcroft Capital. And then we also have Sterling White. Come on down. All right. You'll notice that Sterling has one level. Between 1 and 100, it's 1,000 million. All right. So let's do this. What we want to find out is this market is not easy to find deals, right? Is anyone having trouble finding deals? All right, these guys up here are having less trouble. So let's talk to these guys a little bit. So first off, Mark Kenny. He is a seasoned real estate investor. He's a coach, a mentor with Think Multifamily. He started apartment investing over 25 years ago. And just in the last few years, he's picked up himself 4,000 doors. So he knows a thing or two about acquisitions. Plus, his students, he helped them just in the first year to be able to do, what was it, 2,500 in the first year of coaching. So give a hand for Mark, another little hand for Mark. Scott Levenhart, like I said, he's in acquisitions with Joe Fairless's company, Ashcroft Capital. Prior to doing that, he was with DRA Advisors as the director of acquisitions. He's been involved in over $4 billion of acquisitions, like 5,000 plus doors in all sorts of real estate. So he knows a thing or two, and we're going to get into some of the details on how he's been finding deals lately, especially moving into a new market. Sterling White is an investor, a business owner, as he's on a mission to make the world a better place and bring his positivity, I think, to every single human being. So he's, right now, he got started. I'm interested to get into this with him because I think this is going to be something that a lot of you are going to benefit from. He's been growing lately, just over the last little while. He's got a $15 million portfolio, 350 units and counting. So here we go. The first question that I actually had was for you, Mark, if you don't mind. So the first question that I had queued up for you is, what's the best way that your team is actually finding deals right now?
For us, can you hear me, by the way? Because I make sure, okay. For us, it's really through broker relationships. We know a lot of people that will say, I'm going to try to go to sellers directly, and there's nothing wrong with that, but the reality is you're building a relationship with 1 and 2 people that can then take it to a broker when they find out the property's worth more, right? It's what happens all the time. So for us to be able to go into a market, be able to close deals, it takes a while to go to a new market. Once you get in there, start closing deals, brokers see, hey, I can close deals, then our deal flow is crazy right now. We're not having to look at deals being emailed to us or whatever. Brokers just calling us up saying, hey, I have a deal. It's off market, it's relative, maybe 3 other groups looking at it as well. But reality is we're not having to compete against those. So before we're looking at 100 to 150 deals to get one, now we're probably getting about 1 out of 10 with some of these broker relationships. And it's always the same thing. Can you close? Do you have equity lined up? Are you going to be easy to work with? Frank, if you're a jerk, people don't want to do business with you. It's reality.
Yeah.
So don't be short-sighted on it. Make sure that I always tell people, if you can screw somebody, don't, right? It's a small world. So always have the win-win. And the other guy, for us, for relationships with sellers, we want them to have a positive experience with us as well. Not be taken advantage of, but be at win-win at the end of the day. So for us, it's been broker relationships.
And you said that's brought you crazy deal flow.
It has.
How many deals are you closing right now?
6.
Awesome. Next question that I had for you is, what advice do you have for those of us who are just starting out? Anybody who's just starting out and calling brokers because they want to do the same thing, what are they going to say on the phone when they're calling brokers?
That's a good question. So we hear the same question all the time, right? And probably a lot of you do too. If you talk to people that, hey, I'm looking for deals, I can't get traction with brokers, etc. You can be the nicest guy, be the smartest guy, and even have some money potentially, but at the end of the day, if you haven't closed a deal, brokers don't want to do business with you. We just sold 3 deals, and I would never sell to a first-time buyer, period. Unless they're going to have cash, they can show me cash, and it's going to be more than the other guy, because I don't have any confidence in ability to close. So you need to have the ability to close, and if you don't, you need to find somebody. So team up with somebody that can close a deal. You might say, well, I don't really want to go through that effort, or I don't want to have another partner. Well, if you don't want to get a deal, then keep doing what you're doing. If you want to get deals, partner with someone that's doing what you want to do. It's reality. And then have a message. You know, we always, my wife Tamila and I will say, my partners and I own X number of doors, whatever it is. And some people will say, well, I'm just a passive investor. Well, you don't have to say I'm just a passive investor. You can say, my partners and I own 500 doors, whatever the number is. You do. You're a partner in that deal. You don't have to be the GP. You know, if they ask you if you're the GP, you need to tell them you're not the GP, but leverage everything that you have, whether it's what you've already done as a passive. It could be your occupation. You know, someone's a military or a doctor, it kind of gets that instant credibility somewhat, and then you have your team. And if you talk to anyone doing deals, very few people are doing deals by themselves. Not any deals of any size. They have a team, and reality is each person has something they contribute to the team. But with brokers, you need to have a track record, and if you don't have one, then get somebody else's story.
Do you have a script on what you would say when you call the broker?
Yeah, I mean, for me, it'd be more, the script can change depending on what you're looking for, but if you can't just say, in my mind, hey, I'm looking for properties in your deal, in your area, and 100 plus units, it's fine. You need to be pretty specific. You know, if you don't want to do bridge loans, then you need to say, I don't want to do, I want agency financing, 90 plus, occupancy. I don't want chillers. I don't, write it out on a piece of paper so you can relay it back to because you don't want to waste their time. Before, when we started out, I looked at every deal. It didn't matter if it was 10 units or 5,000 units. I was looking at it, I wasted a lot of time. I didn't have very good criteria. So develop it and then don't compromise on it, right? I mean, why spend time looking at something you know you're not going to buy? So having the script for you, it's the individual decision, what you want your script to be, but having the story to say, hey, this is what we're looking for, and then this is what we've done, and by the way, you can name drop people if you're working with them, and you need to be working for, don't say, hey, I'm working with Adam Adams, and they're like, they call Adam. This happened to me a couple of times where people are like, hey, I heard you're working with so-and-so. I'm like, I'm not working with them. So don't do that, right? But partner up with somebody, have a script that's what you're looking for, and you need no idea what your investor's looking for in the day if you're going to raise capital. Don't just think, well, I want this property, but it doesn't matter. If you can't raise capital, people will say, I'm going to go buy a property in, this town that has, 10,000 people. Well, that might be great. Maybe you grew up there, but now you have to convince every investor it's a good place to invest. So the script and then your track record are the two biggest things for that. And like you said, having a script written out, you don't have to read it, but you get really good at kind of communicating that to brokers.
Scott, if you had to isolate just one thing that you viewed as the most important factor to acquisitions, what would that one thing be?
So, everyone talks about real estate location, and that's absolutely 100% probably the most important item, but it's also where is the location of the asset that I want to buy, and does that make sense? Like a Staples store on Fifth Avenue in New York City, is that the best location for it? Probably not. It may be the best location for retail in New York City, but it's not the best location for a Staples store. So in acquisitions, I find it extremely important. The numbers are important, got to make financial sense, but take a step back. At the property I'm buying, and Ashcroft, we focus on multifamily assets, so you got to ask yourself the question, why does somebody want to live here? And are the renters that I want at my property, why would they want to live here? And so you want to look for, is there a supermarket nearby? Or how are the schools in the area? How's the access to the employment? Because it could be the best location in the city, but you may be trying to redevelop a Class B property and get $100, $200 rent premiums, but those people who have that income that can support it don't want to live there. So for me, it's taking the step back and saying, is this a great asset in a great location, and combining the two together.
The other question that I wanted is, you guys used to be really focused in DFW. Mm-hmm. So ever since you moved to the Florida markets, what challenges are you running into?
Yeah, so it's a lot of the challenges, and a lot of the challenges that you brought up coming, being new to an environment is, what's that first call to a broker? And as Mark said, it's being laser focused. I called up, I spoke to every broker in Orlando, Jacksonville, and Tampa, introduced myself and said, hey, this is what we're looking to buy. This is our box. Will we go outside of that box? Potentially. But for the first couple of deals, these are the locations we want. These are the MSAs. This is the unit size. And it's really kind of giving them something to benchmark off of when you're talking to them about a deal. But it's also, as Mark said, is building that broker relationship. That's been hard. We've been in Dallas for over 3 years at this point and have fantastic broker relationships there, which you can't replicate overnight in a new market. So we're leveraging those relationships to help us in the Florida markets. There's a lot of cross-pollination in terms of brokerage shops there where we're saying, hey, XYZ broker, do you mind calling your counterpart in Tampa and setting up a call for us? Do you mind vouching for us on this deal that we're bidding on, and say that, hey, we're good buyers, we show up, we get the equity, we're not going to retrade. So it's utilizing the existing relationships that you have, and that's been an advantage that we have at Ashcroft, that we do have a good reputation in the Dallas markets, but that's the hardest challenge at entering a new market, building up that reputation. And once we're lucky enough to get a deal there, it's building up that reputation and doing what you said you're going to do. Because the last thing we want to do in a new market is walk away from a deal or not be super confident about it.
So what are some of the things that you're doing to really dive deep into those broker relationships?
Yeah, so real estate is a people business. From where we're sitting, it's a people business. It's not always dollars and cents at the end of the day that's important, but as Mark was alluding to, you're going to want brokers to recommend you to the seller. You want them to speak highly of you. And so again, without a track record, it's difficult. So, we're based in New York, so I travel a lot to Florida. It's about, I may only need to be there for a couple hours to see a deal or two, but go schedule a lunch with a broker, go buy tickets to a baseball game, to a basketball game, and invite a couple of brokers to come with you, host a dinner. And it's developing those personal relationships where if all things equal, the broker is going to say, hey, this guy's a great guy, we've spoken a lot, I feel confident if I recommend him, he's going to close. And so go that extra mile and really focus on the personal relationship with the brokers.
Love that. So you're saying that one of the most important things is to actually go to the city where you're going to be buying and have dinner, have lunch, meet up with them.
Exactly. Make your face known. Let people know that you're not a company that you're talking to, that you're a human being, and try to find something to relate to with that broker. So you say, hey, how's the baby? I heard you're not sleeping. Do you get any sleep this weekend? Things like that, where you could make it a little more personable.
Awesome. And Sterling White, he started out and he was calling brokers, right? And having a really hard time breaking into that. So what are you doing right now to find deals?
Yeah, so great question. I do want to say that love that picture of me over there when I had that hair, so I'm just doing a little bit of reminiscing right now. Like, gosh, I just want that back. It's all good. Love the baldness. But what was the question again?
So what are you doing to find deals that's not calling brokers?
Yeah, so we're going strictly direct to owners from that standpoint. So we're having our general criteria of, okay, we want apartments between 50 to 150 units, and then we'll start to do the digging and find out who the owner is of those assets, and we'll go the route of just pounding the phones and getting in touch with them.
Awesome. How do you do all that outbound calling with your direct lead to the seller? How do you guys do that?
Yeah, so we systemized it to where there's 3 specific roles, and this really helps for people who are not interested of the rejection, getting kicked in the face, because it can be tough at times. So you can outsource that. So the roles are, we have a researcher, is the person who does the digging of the information, finding out who the owner is of the specific asset. Second is the person who will be doing the cold calls, so getting in touch with the owner. And then you have the third individual, which could be myself or you as the head of acquisitions, to actually close the deal. So the cold caller is the one that qualifies, and then you're the one that essentially closes it.
Okay, so what happens when you're following up with somebody and they say they're not interested?
So that's when it depends on if it's a if it's an initial phone call, that could just be something, a red herring that they're just throwing out. So you may have to get past that and see if they're actually not interested. So there's a lot of role playing that you could do. I'll give you a prime example. Just throw it out to me. Not interested.
Not interested. Thanks, though.
Adam, completely understand. Give me 30 seconds. If you don't like what you hear, I'll hang up on myself. And
Okay.
and then that's when you go into the qualifying, because you want to be both interested and interesting. And you'll say, hey, does your apartment happen to have 50 units? They say yes. And then if I offered you the right price, then would you consider on selling? And then at that point, you get that dialogue. And then if they're still not interested at that present time, that's when it goes into a whole follow-up sequence. Because just for me, what I've realized is even though when you're buying, you're still ultimately selling. So it's a whole sales process in itself.
All right, so how many touches are you usually doing with each of these sellers?
To just get in touch with them, between 7 to 12.
Okay.
So quite a bit.
What are those strategies? You mentioned getting their phone numbers.
Mm-hmm.
What other ways are you reaching out to them?
So there's phone numbers, there's utilizing the public records. So some mom and pop owners will have the tax billing addresses or home address. So that's one route. You can send a yellow letter, or one thing I've mentioned to other people is a Rubik's Cube, which you'll send a small note and say, hey, let's figure this out, looking to try and get in touch with you. Or you can send them a shoe that says, hey, just looking to get my foot in the door. Here's my contact information to get in touch. Highly interested in purchasing your property.
Awesome. How big are these shoes?
They are, well, to be cost effective, about this size. Not sending a size 12 shoe.
Okay.
Could do that.
Good.
If it's a really solid deal.
Good deal. And so we have time for any questions. So if the mic runners want to get started, if anybody with a question, we've already got one over here. Go ahead.
Hey, Sterling, Chris Clothier. And I've got a question for you. I started seeing you probably 2 or 3 years ago on the Bigger Pockets website, where you started writing articles for the blog, I think it was. Mm-hmm. So how have you used your time where you're there educating and doing that educational marketing back to you? How has that benefited you, and have you been able to source deals or build your credibility to buy more deals by kind of putting yourself out there as an educator and sharing on that platform?
Yeah, that's a great question. More of the benefit that I've gotten from utilizing that source and the giving of value is just getting being more trusted, and then bringing investors on board to partner on deals. So that's the biggest benefit. I've had other people who are sourcing deals send them, but they just haven't worked out. So I haven't had, but great point though. Wish I was able to get that.
While we're queuing up the next question, I was curious if you guys could all share just what size of deal are you looking for and why?
For us, 50 to 150 unit apartment complexes, and that's due to we see more mom and pop operators, because what we've tended to see as we go up, they are more sophisticated, and they'll say, why would I go through you to sell off market when I can just list it and get top dollar for it? So that's where we've seen the most success in our niche, C-class assets, C to C plus type neighborhoods.
Scott?
Yeah, and at Ashcroft, we're more focusing on institutional quality assets, kind of $20 million and up, 250 units and up. That's the kind of the space that we want to be playing in that kind of Class B range is what our focus is on.
For us, it usually has to be at least 100. We have like 384 right now, 220, type of that. It takes as much work to do a 500 unit as does a 50 unit. And for us, it's really more economies of scale. We have properties that are smaller, and personally, I think they're paying. We pay more for payroll than we should, because you need a full-time person there, but you don't really need them full-time. Once you get to about the 100, you get the economies of scale for property management and things like that.
Do you have a question?
Yeah, so this one's to Sterling, Stephen Pesavento. Question for you on after you make that initial call, you're talking to the seller, you're starting to have that acquisition conversation. Are you locking most of that up directly over the phone, or once you get that conversation going, are you actually going, flying out to the property, or I don't know if you're only marketing within your area, but just curious on that.
Yeah, a lot of times we've already seen the property, already been to the market. So this is an asset that we've already honed into and understand that this is something we want to go after. And in terms of the initial conversation, it could go either way. Sometimes they're ready to go then and there. We say, okay, do you have your financials? Trailing 12. A lot of times they're mom and pop, so you say T12, they're like, what the hell is that? So you say profit and loss and a rent roll, and that's when you start the underwriting process. But then if they're not ready to go, that's when it goes into the follow-up of, hey, I just happen to be in a neighborhood 2 weeks from now, would you mind grabbing it? Like the broker relationship, it's virtually the same path.
Danny Randazzo with PassiveInvesting.com. Scott, question for you. Can you walk us through the conversation that the Ashcroft leadership team had to identify Florida, and what specifically did you guys like about some of those markets that you were looking at now acquiring in?
Sure, yeah, so we literally took the whole map of the United States, tons of market data, and narrowed it down to 20 or so MSAs that we wanted to focus in on. And in that, we did research. We had calls with brokers in different markets to understand what are the drivers there. You know, is it what's driving employment? What's driving population growth, income growth, rent growth? And we really kind of aggregated all this information. Then we took another look at this and kind of narrowed it down to 8 to 10 markets or so, and then kind of kept scaling that down by taking a look at those factors. And at the end of the day, what stood out about Orlando, Tampa, and Jacksonville was the extremely strong employment growth, the extremely strong population growth, the favorable tax environment for both incomes and businesses to grow there. And looking at it, you know, we looked at, not to put any market down or kind of against each other, you know, Atlanta has already seen a lot of this growth. Charlotte has already seen a lot of this growth, Nashville as well. So we were looking at markets that kind of still had wind behind its sails. And we picked those 3 markets because we felt that they had the greatest amount of wind kind of behind its sails. You know, Orlando, for example, is projected almost at 4% employment growth over the next few years versus the national average about 1.6, 1.8 or so. So it's almost more than double the national average in employment growth. And so by taking those factors, and also we looked at the size of those markets. You know, at Ashcroft we have 5,500 units in the DFW market. And so we said, where can we scale that as well? Yes, there are a lot of smaller markets. Vegas is a fantastic market that only has 150,000 units in it, though, so we pretty much have to buy every deal this year in order to scale that size. So we felt that we could scale quickly and efficiently in those 3 markets with plenty of growth behind it on the organic side.
My question is about tertiary markets. We've also, quote, followed the yield there, like a lot of people, 1 to 200 unit deals. Do you guys, in particular Scott and Mark, do you guys have any concerns or major concerns about investing in B class or even improving C class up into B class, so to speak, in tertiary, say under 150,000 population type markets in general? I know it's very market specific, but in general.
We've gone there, not a lot. I think you need to look at similar to what Scott was saying as far as what's the employment. A lot of people in those markets, they grow up there, they live there, they never move, right? So they rent there, it's a renter's market. But we also want to concentrate on what is there from an industry perspective. It's all military, all energy, I don't like them. They need to have more than one market, you know, driver industry to make it work. Yields are better for sure. It is tougher for getting property management companies there, contractors, things are just tougher there. But we have a couple and they've done really well there. But I don't personally go out looking in tertiary markets directly. Some people in our group do to get the yield. I don't think anything wrong with it. I think you have to be a lot more cautious in those markets than Florida or, you know, so big, you know, Orlando or DFW or Atlanta. Those markets are much better. But, you know, it's a little bit easier to compete in those markets when you're starting out too. for you to go and compete in Dallas-Fort Worth or in Orlando or whatever with just getting started is a lot harder. Go to a tertiary market, you kind of build those relationships with the brokers there, and maybe even like, Sterling with the sellers. There's less competition because not as many people want to go there. So we'll look there. We're very cautious about it. I don't think there's anything wrong with it. You need to look at a lot of look at a lot more factors when you're looking at tertiary market, though.
Yeah, and just to kind of double on that, and to my first point about location, what's the location best for that asset that you're buying? Why does someone want to live there? If someone wants to live there because it's cheaper than living in the main MSA, then you may start to be nervous if there's a slowdown that those people are going to move right back into town and move a little closer. So you want to know what the drivers are and why someone wants to live there. And if you get comfortable with that, there's a purpose and a price for everything. And so it's just pricing in that risk of, hey, I may not always be the number one option for these renters in those markets.
And financing typically isn't as attractive either. So lenders who have the biggest investment in the deal, typically for any investment we do, they don't like those markets in general as much either, and is a general statement.
Who had the next question?
Down over here. Hi, I'm Emmitt Smith. I want to know how you balance not retrading, being easy to work with the brokers, especially on new broker relationships, when there may be legitimate reason to retrade that could change your projections during due diligence.
Sure, and we could get into this in a little bit later on a panel about due diligence, but it's all about, we've been, at Ashcroft, we've been successful for 3.5 years. We've done 22 deals, so you learn a lot from that. And the biggest part about being on the acquisition side is developing a capital budget that you feel is appropriate, that you underwrite rents to where you feel comfortable that you could hit and potentially exceed. So you really need to do that diligence before you're bidding on a deal or before you're giving it a price. And then using that kind of due diligence period to confirm that. And yes, there are going to be situations where you say, hey, you told me that the roofs are brand new. I inspected it and they were brand new 30 years ago, but they're not brand new today. So you're going to have that conversation. But again, it's doing the diligence up front and being able to do enough research, ask the right questions, and get out and see the property. In Florida, we're consulting with local groups down there to say, hey, what are my expenses going to be? What are my payrolls going to be? How much is it going to cost me to renovate these units? How much does it cost to paint the property here? So before we're bidding on these deals and saying, hey, I want this deal for $10 million, we're kind of vetting a lot of that out and leaving ourselves enough cushion to say, hey, if something non-catastrophic happens, can I absorb that? And that's usually in our numbers as well to make sure that we don't have to retrade the deal.
And some of it comes down to what properties you're buying. If you're buying 60s and 70s properties, you're just going to have more issues than buying mid-80s or 90s or whatever it is. And there are legitimate reasons to potentially retrade, but a legitimate reason isn't I want it painted or the concrete or whatever, right? Things you can physically see, but foundation is especially in Dallas, is a reason. You could say, hey, we got inspected as foundation issues or the roof or electrical problems, things like that. But at the end of the day, if the deal still works, then live with it. Don't feel like the seller is getting one up on you. If you have to add another $100,000 to your budget and it still works for your investors, and then the seller doesn't want to negotiate, then just go forward. Mm-hmm. I know people that when I was involved in a deal, a guy almost lost a deal because just his pride, frankly, this guy isn't going to get one up on me. The deal still worked. It's like, it's in 2 years, went from 15.4 million to 26 million, and this guy almost walked away from the deal when we bought it. $50,000.
And a lot of the conversation to be had, a lot of the things that we discussed, finding major capital items that you can't eventually see. If you drop the deal or say, hey, I need a $500,000 price reduction because I found this, this, and this, the seller is going to know that the next person that tries to buy is going to find the same issues. Right. So you have that conversation up front. You have that conversation when you find it. You don't wait till the last minute where you got to hold the gun to the seller's head and say, make a decision or I walk. You try to work through it because at the end of the day, your goal is to buy the property and their goal is to sell the property.
It's a great point. One thing I would say, and some people might disagree, I wouldn't piecemeal it though. Wait till you have the information to have the conversation. Don't be like, oh, the roofer came and it's, you know, it needs $100,000, and then next day electrician shows up and, oh, we need another $50,000 for that. Make sure you have all your information up front. First, you're not multiple times going to retrade, because the seller's going to get upset doing that.
You'll get a bad reputation
You
too.
will.
Exactly,
Yeah.
yeah.
One last question? Okay, perfect.
Andrew Kiefer from Houston. This is a question for all you guys, including you, Adam. In today's market, what keeps you up at night? And the other one is, if you wouldn't be doing this, what would you be doing? If you wouldn't be doing multifamily, what would you be doing?
Okay, so start with me. So the keep me up at night when we're raising capital, because we have a lot of deals. So we'll have sometimes, you know, 4 or 5 deals all kind of closing in a 4 to 6 week period of time, and we have, you know, millions and millions of dollars to raise. So that does keep me up for sure. My wife Tamila asked me just yesterday at dinner, said, "What would we be doing?" Or before dinner, I guess, for lunch, saying, "What do you think we would do if we didn't if we weren't doing multifamily?" And I'm like, I don't know. I'm thinking like maybe a race car driver. I don't know. I don't really know. I did IT before. I had no plans of doing that. But you know, it's a really good question and something I need to think about more. But I don't have a great answer for it, frankly. What I would do other than this.
I think what we'll do is we'll reach out to you directly to finish answering that question so we can wrap up the panel. But thank you guys, and thank our panelists.
Thank you, Adam.
Thanks, Adam.